Welcome to the Deep Dive. Today, we're really zooming in on the economic outlook, specifically through the lens of, well, a major figure, Jamie Dimon.
The CEO of JPMorgan Chase, yeah. His words definitely carry some weight.
They really do. And we've been looking through a Motley Fool article that covered their first quarter earnings call that happened just today, actually, Friday, April 11th, 2025.
And what's striking, I think, is this sort of tension. JPMorgan's results, pretty strong.
Exactly. Really strong. But Dimon himself is voicing some significant concerns about where things might be heading.
Right, so it sets up the central question, doesn't it?
It does. What's really worrying Jamie Dimon about the economy right now, especially when his own bank seems to be doing quite well?
It feels like a bit of a puzzle. Good numbers from the bank, but unease from the boss.
Let's try and unpack that apparent contradiction.
Yeah, it's a fascinating contrast. You've got this, financial giant, JP Morgan, putting up solid earnings, even slightly raising their forecast for a key revenue stream.
That interest income, yeah.
Right. And then the CEO, a guy with decades of experience navigating these cycles, is pointing to some potentially big risks out there.
It really suggests that just looking at, say, JP Morgan's performance, while useful, might not give the whole story about the wider economy.
Exactly. So why the disconnect? That's the key.
Okay, so first point, the recession odds. The article says Dimon basically puts it at 50-50.
A coin flip.
Just a straight coin flip. That definitely gets your attention, doesn't it? Especially from someone in his position.
It really does. It suggests, genuine uncertainty, not just sort of standard CEO cautiousness, especially given how well the bank's actually doing right now.
And it's worth remembering, like you said, this comes right after JP Morgan didn't just meet expectations, they beat them. First quarter earnings and revenue were both better than analysts predicted.
And they nudged up that guidance for net interest income NII, which, as we know, is super important for banks. It shows their core operations are holding up well.
For now, at least.
Right, for now. Which is a key takeaway, even with Dimon sounding these broader warnings.
And it wasn't just the top line, was it? The article mentioned their credit quality seemed pretty stable, too.
Yeah, net charge-offs, loans they don't expect to get back, were steady.
And non-performing assets, loans where payments aren't being made, those actually went down a bit from the last quarter.
Which is interesting. They did add a bit more to their credit reserves, setting money aside for potential future losses.
About $1 billion, I think.
Yeah, but that was actually less than they added the previous quarter, so maybe a sign of slightly less immediate worry there.
Perhaps. And connecting this back to Dimon's caution, it suggests that right now they aren't seeing a huge wave of borrowers getting into trouble.
Not yet, anyway. These things can take time to show up in the numbers, of course.
True. And their capital position looked really solid, that CET1 ratio.
Common Equity Tier 1, crucial measure of their safety buffer.
It was at 15.4%. The article made a point of saying that's way higher than before the pandemic.
Significantly higher.
Yeah.
Which means, theoretically, they're much better placed to handle any economic bumps in the road.
So, yeah, on the surface, JP Morgan looks pretty well fortified, which makes Dimon's continued warnings all the more interesting.
Exactly.
The article says he's basically telling people, look, don't read too much into these past results or even our own forecast.
He called the guidance a short-term number.
Yeah, a short-term number with a wide range of potential outcomes. Sounds like managing expectations, doesn't it?
Definitely. It's like saying, yes, things look okay now, but that doesn't guarantee smooth sailing ahead. Highlighting that lag effect you mentioned. Problems might be brewing under the surface.
Right. It takes time for economic stress to really filter through into things like loan defaults for a bank.
Precisely. He's saying today's good news doesn't fully shield them, or the wider economy, from issues that could develop later.
And it seems like his expectation of a potential slowdown goes beyond just JP Morgan.
You mean his comments about the S&P 500?
Yeah. The article mentioned Dimon expects analysts will probably have to cut their earnings growth forecasts for the S&P 500 right down.
Down to zero growth, wasn't it?
Zero growth, which is a huge change from earlier projections. They were talking maybe 10%, then revised down to 5%, and now zero.
Wow. That signals a much wider expectation of, weaker profits across corporate America. That could definitely feed into a slowing economy.
It gives you a real sense of the shifting mood. For listeners, zero S&P earnings growth could impact investments, maybe even job security in some areas.
It's certainly a more cautious take on the overall health of U.S. businesses.
Now, even with all this caution, the article is clear that Dimon doesn't seem panicked about JPMorgan's ability to handle a potential recession.
No, he seemed pretty confident in their own position, right? Strong capital, lots of liquidity.
Exactly. He even apparently brought up their experience during the pandemic, how they quickly built up reserves and then released them later as proof they're ready.
Yeah, like, we've been through stress tests, real ones, and we know how to manage this.
So it sounds like he thinks JPMorgan itself is well prepared, well buffered for whatever might come economically.
And that's a crucial point. Their financial strength is a big advantage. That pandemic experience likely gives him and the bank a lot of confidence in their own resilience.
Okay, but here's where it gets really interesting, I think. It seems Dimon's biggest worry isn't just a standard run-of-the-mill recession.
Right. The article really stressed his focus on the future of trade and global stability.
That feels different, doesn't it?
Yeah.
Not just interest rates or inflation, but something. Bigger picture.
Much bigger picture. So while he acknowledges the 50-50 recession chance, his main concern seems to be these global geopolitical factors. He sees those as potentially more disruptive, maybe less predictable than a typical downturn.
The article mentions the context President Trump putting that 90-day pause on higher tariffs for most countries.
But not China. China's still the exception.
Right. And even with that pause, Dimon's warning about considerable turbulence coming from, well, trade wars, sticky inflation, and those fiscal deficits everyone keeps talking about.
That trade war piece seems huge. The article quoted some pretty eye-watering tariff numbers.
Yeah, 145% U.S. tariffs on China as of midday Friday.
And China hitting back with announced retaliatory tariffs totaling 125%.
Those are massive numbers. You can see how that could seriously mess with supply chains, push up costs.
Costs for businesses, costs for consumers ultimately, and just generally put a damper on economic activity globally.
And Dimon was apparently very direct about it. He's quoted saying something like, guys, this is different. Okay, this is different.
Emphasizing that this isn't like past cycles.
Exactly. He stressed the importance of safety and freedom for democracy and called the China issue a major issue. It sounds like he sees these geopolitical shifts as fundamentally rewriting the economic playbook.
It's interesting how he frames it, linking economic stability directly to these broader geopolitical concerns about democracy and international relations. It lifts it beyond just a financial risk calculation.
Yeah, it suggests he views these global dynamics as a unique, maybe more profound threat than just a normal business cycle dip.
And he even brought up JPMorgan's own position in all this, didn't he?
He did. Wondering how their global presence might be seen now. Like, will clients or even whole countries start looking at U.S. banks differently because of all these tensions?
That's a fascinating angle. For a truly global bank like JPMorgan, navigating those perceptions, maintaining those international ties, must be incredibly complex right now.
It really highlights how tangled global finance and international politics have become.
Absolutely. Increased tension, especially between giants like the U.S. and China, creates uncertainty and could strain those crucial relationships for the bank and its clients worldwide.
There was a slightly more hopeful note, though. The article mentioned Dimon still hopes the Trump administration can negotiate some good trade deals and bring some clarity.
So not giving up hope entirely for some kind of resolution on the trade front.
Seems like it. He wants clarity, basically.
Yeah.
Which makes sense.
That hope for clear, favorable deals is really important. Uncertainty is poison for business investment and growth. Predictable rules, even if they include some tariffs, are probably better than this constant flux.
He also clarified something about his own stance on tariffs, saying he does see a place for targeted tariffs, specifically for national security reasons.
Right. He mentioned things like rare earth materials.
And critical medical stuff like penicillin and semiconductors, key strategic areas.
But he also pointed out that this kind of targeted approach only covers a pretty small slice of overall global trade.
Yeah, so it sounds like he's arguing for being strategic and focused with tariffs, not just broad, sweeping ones across the board. That distinction matters.
It does. Targeted tariffs for specific security reasons are very different from broad tariffs used mainly as an economic weapon. One is a scalpel, the other's more like a hammer.
So wrapping up that section, the article notes, Dimon's view seems to resonate with a lot of investors right now. People are really struggling to figure out the long-term impact of this whole trade situation.
Yeah, there are just so many open questions, aren't there? What does the future of global trade look like? How will other countries see the U.S. as a trade partner going forward?
And what are the actual economic effects going to be from all these new deals and tariffs? It's a lot.
It really is. Investors are right to be grappling with it. It feels like a major shift away from them more, I guess, predictable global economic patterns we got used to.
The interconnectedness of it all means changes in trade, and politics can have these huge, sometimes unexpected ripple effects everywhere. It makes forecasting incredibly difficult.
Definitely a departure from the usual economic cycles.
So, to try and synthesize this for everyone listening, yes, JPMorgan Chase looks financially strong right now.
Solid numbers, strong capital.
But Jamie Dimon's main headache, it seems, isn't the typical fear of just any recession. It's more about the unprecedented nature of what's happening now.
Driven largely by these global trade fights and the wider geopolitical uncertainty.
It really sounds like he sees this as a fundamentally different kind of environment compared to past economic challenges.
Yeah, his focus is less on the classic warning signs of a recession and much more on the potential for major disruption coming from these big shifts in global order and trade dynamics.
He's looking past the immediate numbers, isn't he? Thinking about the longer-term consequences of these huge global changes.
Exactly. And it kind of underscores the idea that maybe our traditional economic models need, well, an update to properly account for these massive geopolitical forces.
It really makes you think, doesn't it? About how we understand and predict economic shifts. Maybe those traditional models do need to factor in geopolitics much more heavily now.
It seems increasingly necessary.
So a final thought for you, our listeners, to consider. How is this deep interconnectedness between the global economy and these big geopolitical events changing the game for economic forecasting and risk assessment? Maybe in ways we haven't quite grasped yet.
Yeah, what aspects of global trade and international relations do you think will end up having the biggest economic impact in the coming years?
Definitely something worth mulling over.